Phoenix of the team.
Ladies and gentlemen, welcome back to another episode of Chart Talk. Me and Bennett bringing you the hits of the market every single week and most weeks. But some really interesting stuff going on in the market. Wild ass day out there today. Let's hop right into the market outlook. So today, Afghanistan fears, all the fears of the Delta variant, all these different things going on in the market. There's a lot of headline risk. And the market didn't really care about this Afghanistan news Friday. And then today it showed it cared. And we sold off in the beginning of the day. We saw some real weakness in tech. And then, we saw that snap back again. We saw the market absolutely snap back. Let's look at the QQQ intraday right here. Look at a 15-minute chart. Just, straight down in the morning on some high volume selling, only to recover all of those losses later in the day and close at almost new all-time highs. It definitely appears to be a shakeout. It's definitely a nice little flag in the Qs right now in the daily chart, right in this area. But, I'm more skeptical than I've ever been personally, just looking at the underlying action, just kind of seeing, the change of leadership every day. We like to see money rotate. We don't want to see drastic changes in leadership every single day. And the reason I say that is because that usually indicates that institutions, smart money, the real big money, is using those down moves that we saw in the morning in the Qs to, unload positions. Then it gets bought up on really light volume. That just to me indicates that, we're seeing a lot of selling under the hood. And with the elevated levels we're seeing in the markets, that's a big cause for concern for me personally. Looking at this daily chart in the Qs, I should just say it's a shakeout and we should just continue with the status quo and keep buying every day. But, it's no secret. It's been very difficult out there. It's been very narrow leadership. It's not like, usually when the market's just grinding higher like this, we see setup after setup working. We get asked if they should be a professional trader 800 times a day. And things like that we're just not seeing at all in the slightest. It's a very difficult environment. Even for me, it's been very, very challenging. No problem saying that. But, I think we look good in the market, in the indices. We got a big week of news coming up. Big Fed meeting Wednesday. They're allegedly mapping out the taper schedule. That could be, a warning shot to the market. We'll see. That's just me speculating. But, I think there's just a lot of things that are concerning right now underlying. So I am taking my foot off the gas pedal personally. I'll show you guys a good trade, bad trade later, what I did today and how I kind of took off a lot of positions into strength today. But, that's what I got for the market outlook. Ben, what are you thinking over there?
So I got three charts we can go over really quickly.
Got it.
First one, again, you already went over this slide pretty briefly. I'll just talk very quickly on the three major pivots. So if you are, again, very nervous, the most recent pivot or the tightest one would be versus 435. If you have a little bit more of a risk tolerance, 420. And again, the most major or significant pivot, for the past quarter or so has been that 400 level. So if the market does start to turn back lower, those are some key spots to, again, de-risk or raise some cash. And again, if we continue to hit these new all-time highs and we continue to drift higher, who knows how long it'll be till we hit 500.
Right.
So again, other than that, sector-wise, again, tech, if you move over one chart, shake that. Of all the sectors, tech does look the best.
Looks great.
Chart-wise, again, just flagging all-time highs. You can, again, we typically look to buy through all-time highs. Again, very tight little pivot versus 410, 404 area. But again, the more significant levels can be versus at 393. And then lastly, again, we have this biotechs. Again, we always try to hammer in that lesson of the retest. Of it can run into that retest and look amazing, but typically gets met with sellers, and we saw that clear as day with the biotech sector. As it retested, ran push up to that prior pivot, and quickly kind of retraced back down. And again, one of my worst trades in the past few weeks has been that rocket, which was in the biotech sector, and a few underlying names have been getting beat up in that sector. So that's just kind of a little broad market outlook on some of the sectors I'm keeping an eye on. And if you'd like, Jake, we could jump into some of the top ideas.
Yeah, no, and then I have to add, with everything I just said, me having all this concern, the market climbs on the wall of worry. People need something to be bearish about for us to keep climbing. So, with all that I just said, the wall of worry could actually continue to propel us higher. So, that's the market for you. There's going to be a reason for any action.
There was a chart I saw the other day, I wish I would have saved it, where the person mapped out
every
the
fear?
percent. No, not the fear chart. It was a pretty cool chart, and I got to go find it out. Where he basically showed within, the percentage range within all-time highs, and it was like within 5% of all-time highs, within 10% of all-time highs, within 20% of all-time highs, and then like within 30. So just relative to how close we were to all-time highs. And if you look at this chart of the market, 90% of the time the market was within that 5% range of all-time highs. And main point was, throughout history, pretty much the market always looks very expensive at that exact moment, but then when you rewind time, it always looks like an amazing investment opportunity.
Right.
And hopefully I'll find it, and then maybe next week we'll pull it up and we can do a little bit more of a deep dive on it, because I did think it was pretty interesting.
I have a funny chart that I have that I was looking at today. Like, I have this in my IRA from just like, honestly, from, I don't know my price. The chart is DHR, and this was one of the first stocks I bought in the IRA, and we bought through 104, and it's one of those stocks I'm just not touching no matter what, And I looked up today. I don't have a lot of money in it at all. It's not like I'm crushing this name, but I'm in it. I've been in it for years. I bought it at 104. It's trading at 318. Never in my wildest dreams when I bought that day at 104 would it be at 318 in 2 years.
Yeah.
So that just goes to your point. What you're saying is, things are going to look expensive in time, but there's so many charts out there that are just growing exponentially that you can have never even imagined. So yeah, credit to you for that.
All right. So first idea, IART.
IART.
Off the shakedown.
Yeah, I mean, looks really good. This is it's kind of a sloppy flag right here. Definitely an earnings flag though. We love those. Looks pretty good. Maybe you start through the 72 area. The trigger would be that 73, 73.50 area. But at that point, you'd have to give it like $5, so it makes it way too much risk. I think the name looks really good. The entry's a little tricky right now. I don't really want to buy 73 versus 68. So, I'm going to continue to watch it flag, continue to let it set up, but definitely looks like it goes higher in time.
Next up is this Netflix.
Netflix, huh? All right, so I didn't love Netflix earnings, but you cannot discount this weekly chart. This weekly chart is insane. Every time Netflix has done this, we look back at, 2018. We look back at 2015 through 2017. Anytime it's had one of these long, drawn-out flags, people forget about it. People will be like, oh, the growth is slowing. It's happened 6, 7 times in its career of trading. And that's kind of what we're seeing now. So even though I didn't love their earnings, I definitely have an eye on this chart. I don't think I'll buy it down here through this. Are you going to buy this 527?
So I took a trade in at end of July? It was a break-even trade. Like I was just trading in this like little range. I would look at it, probably just wait up through 530.
That's what I'm thinking. But yeah, so it has this little mini base. You could try it through 527. I'm personally not going to, with my kind of outlook on the market. But I think that 545, 550, what is that high there? At 557, I think through that area, it's kind of like a can't miss trade. And then it goes back. Like, what did we see all last year when it was like Apple, Amazon, all these guys were stuck in the mud, and it's like, oh, they're not going to lead the market anymore. Their growth has plateaued, all that shit, and now Apple, new all-time highs. Same shit. So that's what we constantly see out of the mega cap tech names. So I would not be surprised at all to eventually, out of nowhere, see volume come into Netflix and all these things we've seen so many times in the past.
Yeah, and even go with that, the next one up was actually Amazon.
There you go. Same shit. This one's tricky because of the gap down on earnings. I am not really that interested in this one yet. I know it's Amazon. I know what their numbers are. I know how much money they make. I just think it's been such a tricky name to trade. I want this thing to base out for another 6 weeks, give us a perfect setup for me to get involved. But, it's Amazon. It's a market leader. It continues to grow at alarming rates. How useful it is to everyone's everyday life at this point. But I'm not buying. Are you buying this pivot?
No, so I'm looking at up through 3,400.
34. So the top of this mini flag on the daily.
Yeah.
Okay.
So it just reminds you, if you zoom out a little bit, and if we look at kind of Amazon late 2018 into 2020, where it was just battling with 2000, and that was that was a huge drawn out flag, very similar to now, and we saw again it had good earnings. This was beginning of 2020, had that breakout at that time, new all-time highs, and completely came back, kind of shook everybody out, and then it had that next 1,000 point move. And we're seeing somewhat similar with this 3,600. It had that little breakout to new all-time highs, shook everybody out with this little earnings move. And Again,
Okay,
if it's going to trade similar to how it did in 2020, it might need a little bit more of like a real shakeout than this like little pivot here versus 3,200.
Yeah.
But I think that this is one of those trades where like even for us, I don't think we really capitalized that much up through that 2,000 to 3,000. I think we kind of forgot about it because we kind of got chopped out in that shakeout. And this kind of like reminding me of, it just looks very similar chart wise. Again, back then it was a very big macro bull flag. We're seeing the same thing here and kind of similar action. So I'm keeping it a little bit close on the radar because I just think that if this pattern does repeat itself, there's no reason why this can't easily drift to 5,000 or 6,000 or higher. So just kind of keeping a closer eye on it. But I think we need.
Oh yeah, go.
No, that was it. Just more of that shakeout move.
So, and what I was kind of mentioning before, where I was talking about Netflix, and these names just get volume in and out of nowhere. I'm bringing out, March 2020, between March and May 2020, and you see this thing, it's trading, and then you look at April 13th, 2020, where it starts to break out. It's like really no rhyme or reason for it to be breaking out there. It's not like breaking this huge macro resistance level. It's above 2,000 and flagging above it. But it's just like the volume comes in out of nowhere in these names. Then it goes on, a 500-point 4-day run. Makes a 20% move or whatever that is. So, I think we just see that so often. These mega cap tech names, people forget about them, and then they, continue to be who they are. So I like the point you just made at Amazon. That was really intuitive.
So that's something here for a shake.
That's it.
Every once in a while.
Yeah.
All right, next up we got KTB.
KTB. Yeah, this one's looking nice. So, this pivot right here, 59.06. So it's like 59.10-ish area. Love this little base at highs. Turn this previous resistance to new support. Just really nice channel. Reacted well to earnings. Hasn't really gone anywhere on earnings. Hasn't gone anywhere since the beginning of June. So definitely like that one through 59.10-ish. Just has to clear this area. It's not an exact number on that one.
Mm-hmm. All right, Shake. So I went over a couple that I took off the shakedown. Is there any other ones you want to go over?
Yeah, there's just a bunch of names I'm keeping on my radar. This 3M, MMM. That looks really nice through this 203 area. Nice little base. This MSA, I think it's starting on a really nice macro pattern. I don't think it's near ready yet, but I think it's got a really big trade in it soon. Just like the way it's, it was really widely, kind of trading very widely. Now it's just starting to contract and wedge really tightly at highs. So I think that one looks great. What else? Cell H, the Celsius sports drink. Mm-hmm. I'm actually kind of looking at this one tomorrow. 2 inside days after earnings. They have this huge level overhead at 80. But it looks like, bring up an hourly chart or 2-hour chart. It looks like, through that 73 versus the earnings day low of 68.80. Looks like you could get started on it if we see some volume. Again, not super excited about that one. Still have my eye on that Skechers, SKX. That was trade of the week. Their numbers are crazy. Chart looks really good. Another one is this MIME, M-I-M-E. I don't love buying these type of setups where it's a really nice macro level, but it's come so far off lows. But the difference maker is they just had a really great earnings report, and they've just gone sideways since. So if it didn't have that aspect in the setup, I wouldn't be that interested. But I'm very interested in the 60 for a breakout trade. And then this ALLE financial name coming out of a big base. We were just talking about how we had an alert for today through this 139 to get started. I didn't buy it. You didn't buy it. We were just talking about how this is the name. We stare at this name for 6 months. Then it finally goes. We take our eye off it, and it's like the quickest 25% anyone's made. So this base is just sporting on the daily is just pretty A+ at this point. When it actually triggers through that 142, 143, I think you got to be involved in some capacity. That's really it. Those are the few I'm looking at. Again, though, I'm not super gung-ho about this market.
Mm-hmm. All right, so I got a quick 3. If you want to rate under the top ideas, I have a couple charts. So the first one is this match.
Okay, huge support level.
Yeah, so this, again, would more than likely expect to shake out down through 130 and would almost kind of want that to have a real snapback move back into the upper end of this range. But again, that we don't really know. It has been pretty beat up since earnings. So for now, just looking to buy up through 140. This is a name I have in M1, kind of a name I've been holding or looking to hold longer term. So I'm not really trying to trade it too actively. But again, up through 130, I would look to add to it a little bit more. And if it does shake down, shake out through that 130, it could, just as easily come down into, back down to the low hundreds again. But just one to keep on the radar.
In my experience, can I this match charts like perfect.
Yeah.
In my experience, when and it works the other way too. When a name that's in one of these huge macro channels goes straight down to support like that, a lot of beginner traders will be like, "Oh, look at this huge support level, time to short." Those are the names that are often the best support buybacks when they just go straight down and look disgusting because it's just like sellers are pretty exhausted at that point. It's just gone straight down. Look at it. It's gone 160 to 130, in 2 weeks or whatever that is. These are often the names that have the best snapbacks. And it works the other side too. The names that fail resistance the worst are the ones that go straight up 20% into resistance. So that you just put that on my radar. That's really interesting spot for this name.
Yeah. All right, next is this QRVO, which I know is a name you've also been keeping a bit of a close eye on as well. Just again, we've been seeing a lot of these higher lows. This horizontal red line is basically that support trend line that QRVO has kind of been following, basically been just hugging the 200-day moving average. And this $200 level has been this macro blue sky breakout that's been setting up. Earnings is kind of past it, so we don't really have to worry about any crazy gap downs. And as it kind of comes into here, I'm looking to just buy up through 190 versus whatever this low is going to be. So if this is a low today, this 184 area, I'll buy up through 190 versus that. If it wants to shake down to 182, again, it's going to be a little bit of a different trade. But for now, that's just something that's on my radar. And the main goal of this would be just a starting position. Like I wouldn't be looking to sell 200. I'd be looking to buy up through 190 and looking to build in up through 198 and up through 200 for a much bigger breakout. And again, this pattern that's been setting up, there's no reason why this can't be at 240 in 6 months or so if it does get that nice breakout through 200.
Love it.
And then lastly, again, the only thing with this WDA is the earnings is in about 2 weeks. But just keeping an eye on this 240 level, it has been setting up here for quite some time. So this could be like an opening range breakout candidate where if it does have good earnings, it does want to go through 240 on after it reports. This could be one we could take up through 240 versus for right now it's kind of versus 230. So not a crazy amount of risk for a $200 stock.
Yeah, you just reminded me. Roblox just reported earnings. They had a miss. I was looking at potentially opening range breakout trade that tomorrow. First glance at the earnings, they weren't that great. Missed earnings, missed EPS, so kind of falls off the radar. But
so a little inside info from the people who actually play Roblox.
No, from a 4-year-old. Don't fucking flag our shit. What are you crazy?
Well, so, yeah.
Holy
so
shit.
Again, I was
info from a 4-year-old. All right, he plays in the sandbox. Feds,
she's 9. Okay, her name is Sari. She's very smart. But no, again,
she's not that smart though. Not that smart. Not like Taylor Mason smart.
She's 9. She's still a kid. But again, I was with my girlfriend's family this weekend. A lot of little kids, a lot of them playing games, and a lot of them had Roblox. And I was just like, "Oh, do you guys, have any in-app purchases?" And it was like, "No, it's a free game and it's great." I was like, "All right." Then I hate it because there's no way for them to leave.
No, you spend the bag on that thing.
So again, I don't play video games, but it was just funny. I'm like, "What game is that?" And then they were walking me through it. But anyways, all right. So with that,
wait. Do you know how the inner workings of Roblox? People can build their own video games. They can make mad money off it.
I didn't know that. Again,
it's a platform where people build video games on it. Then it draws an audience, and the person starts making money off it eventually. Yeah, it's fucking sick.
She didn't give me that breakdown. She was she was playing the game and
giving you inside info. Yeah.
Anyways, good trade, bad trade. Anything you want to go over?
Yeah, I got some charts up. So I'll quickly go over. I guess the bad trade was DOCN. I literally said I did a chart talk by myself, and I was like. This was my good trade, and how it was the first trade I had in a while with big ass size that was working out, and then since I made that comment, it's just fallen off the map. So, I don't think I did anything wrong here. I bought through this pivot high, I had to stop at the lows. From a risk reward standpoint, it wouldn't have made any sense for me to really sell any of my stock just yet. Maybe once I saw this hammer candle, I could have trimmed some, but so I gave the whole trade back. I don't really think there was anything else I could have done. I think I could have looked at these sellers in the 60 area, maybe taking some off there. But overall, I think it was a good entry. I think it was too early for me to start taking profit. So, so today I spent a lot of time just kind of raising funds. I want to take things off into strength because I don't want to have all these long-term swings and just kind of give them all back too much when I'm this skeptical of the market. So right now I have AMD up. I pretty much trimmed almost all the rest of the AMD I have today. This Unity Software, kind of same thing. I bought it as an earnings breakout trade. It was one of those, you get lucky when it just keeps the gains and holds on and gives you another run. But I got out of a chunk today. And what is this? Apple. Apple. I the only thing is I'm very loaded in Apple. My long-term accounts. Anything I talk about on here is going to be short-term active account. So we crushed this name Thursday. We came into the day. This was a great trade on really all of our the chats kind of as a collective. We were talking about how we saw this fundamental shift to the fundamental names the day prior. So we were focused on those names, and the NASDAQ opens very weak. Apple stays strong the entire day, and then NASDAQ comes down, hits support, and all those names start ripping up off support. So at that moment, we kind of collectively just loaded Apple. I bought a shitload. So and then today, it gives us this crazy day so I took some off at resistance today, but it was only after, we look at the intraday action. This thing puked off the open, comes back down to below my price, and then rips back up to that resistance. So I started taking it off then. I still have some, just, I took off probably 65, 70% of the trade, just kind of locking in gains. Again, I'm long in the long-term account. That I spent most of the day kind of, seeing that morning selling. Personally, I took some of this GGG off. This was a nothing trade so far. I still have some, but I just wanted to de-risk with kind of where the market's at, kind of regroup. I just don't think it's been that easy. I think the indices are kind of fooling us right now. But so that's kind of where I'm at right now. What do you want to get into?
All right, so I got a couple of charts. First one, if you want to pull up, is that MMC.
1 second.
And considering you ditched me last week with Chart Talk, I kind of forgot if we went over this one or not.
I didn't go over MMC.
No, I know, but I forgot if we talked about it on a prior one.
Ditched you for Chart Talk, he says. He's on the beach playing fucking Roblox with all these 9-year-old trading savants. I'm not here grinding it out. However we see it.
All right. So again, first is MMC. This is, you have the chart up?
Yeah.
All right. So again, this is a swing we've been in, since end of March. Bought up through 120, added, up through 140 recently, was a little earlier on that add. And as it just started to get extended, this is where I took off. We talk about, different, LIFO or FIFO. This is one where I sold the higher cost position into this move higher. And again, it's still higher today, which is great. But there's just a little trade or not a little trade, but a longer swing typically, it's been a couple months where I just sold the higher cost basis position. I locked in some profits. I still have that core from 120. And if this name does pull back in, I can look to add back if it wants to continue higher.
And now, while we're here, you want to give the listeners at home why it's better to sell the higher cost base first. For me, if I'm looking at this, you bought 140, so you sold the 140 stock, but you're also long 120 stock, and you sold it above 150. Now, why didn't you sell the 120 stock? Because that seems like you're going to make you lock in more of a gain. What's your reasoning behind selling the stock you bought from a higher price and locking in less gains?
Yeah. It just gives me the opportunity where if and when this name pulls back, I'm not as overly, I don't care as much because I have that much of a bigger cushion in the name where if this thing pulls back to 140, I can still just buy back the 140 stock and still keep my good core. But if I sell that core from 120, yes, I lock in that bigger gain initially. But now if this thing pulls down to 130 and I'm losing in the position with the higher cost basis I have left, now I lose money in that trade. And it just ends up, doing more harm than good. So with the winners or any trade, I try to sell the most expensive stock first to get rid of kind of the lowest risk reward position to free up that cash first, and then keep that winner. Just like your DHR from 100, like if you were trading it, like I bought it through 220 and I sold it at, let me pull it up really quick. Like I sold DHR at 250 in that same trade. If I had your same $100 stock, I wouldn't care about the little pullback. If my cost basis was 100, but my cost basis was 220, I was keeping a much closer eye on it. So that's why I typically sell the higher cost position.
And secondly,
first.
as we're always playing the tax game, you're gonna get taxed on a higher basis on short-term games, no matter what. So if you can sell this stock and make 20 points instead of locking in the gain for 40 points, you're only getting taxed on the 20 points, and you want to keep that. You want to keep the long-term gains as long as you can.
100%. Okay, so the next one is Rocket. Again, this is just kind of highlighting my worst trade and just showing how quickly these worst trades could turn into even bigger disasters when you hold on to them longer. Again, fully out of this. I took my 20% loss on the chin. Again, worst trade, but we can see that since that day, it's done literally absolutely nothing but just head lower. And you can see, in basically 2 weeks from where I sold, it's now 20% lower. That 20% loss would have been a 40% loss. And that's a much different trade. Making back 20%, it's 25, 30% return. Making back 40 is a much bigger hurdle to get over. So just kind of a constant reminder of why we want to get out of these losers as quickly as possible.
Right.
Let's see what else. Next, we have this TXT. This is one I'm still in.
There's another one. I just have a stop at today's lows on this one.
Yeah, so this is one I actually bought. I added to it. This is from a daily standpoint. I hated this $73 ad. I really, typically this would not be an ad I would have taken, but just looking at this macro pattern going back nearly a decade, it's like I just kind of had to be involved or add more. But I'm with you. Even like this 73 ad, I have no problem kind of taking it off break even. It does want to roll over, but really the proper stop for now is versus weekly low versus 68.
Right.
And really, in theory, if you really want to be in this for the bigger move, it's really versus 63. But again, as we've seen in the past with this name, when it gets up into this area, it is quickly reversed. So this is not something where I want to take a big loss just to trade it perfectly. I still want to be defensive, and if it does want to have that big move, I do want to try to be involved. So this is one I'm
absolutely
definitely still in. And lastly is this UPS, like that MMC. Another, again, it's hard to say it's a swing trade because I've been in it for almost 5 or 6 months at this point. But I'm starting to see now in UPS that maybe this is more of a much bigger flag or a bigger range that UPS is going to be trading in. This 190-ish area versus this 220 being resistance. So as it came down into earnings, it started to kind of base out a little bit. We saw it kind of test that prior earnings kind of gap up area and started to base out. So I put it in order to add up through 195. I look to add up through 198. Obviously not tomorrow, but in time. Looking to build in. And again, if this turns back down through 188, I'll be moving on with this longer term swing. If it does want to continue up into that 220 area, then I'll continue to still hold it.
I'm long with you. I never touched this stock. I never even sold it when it was in 200s. I just have that first buy with you, that 164. Are you getting fully out of the trade below 188?
So I'll definitely sell this first. More than likely, I will probably be getting out of it entirely. I'll just take the trade because at that point, maybe it's going to start to roll back down and come back into that base near our price. For now, I'm kind of in the camp where I'll take the full position off, but I don't have like a hard stop in for that position just yet, so I don't want to just get randomly ticked out. But this recent ad went through 195, that I will be out. I had the hard stop in below basically that 188 area. So the higher cost basis hard stop, the 165 more of a mental stop for now.
Okay.
And that's all I got. That's my couple trades.
Book of the week.
Yep.
So I just started a new one. It's called what's it called? The biggest bluff. It's about. It was booked by Maria Konikiva. I don't know. I just started today. It's about her poker journey of being complete novice in the industry to being like a world champion. And it's all just kind of psychological and everything we can relate to trading methods. Supposedly, that's how it was recommended to me. So I'll have more on this next week. How I learned to pay attention, master myself, and win. And it's kind of all about which is just like the market. You give 10 people 10 setups and they'll trade it 10 different ways because it's all about how you perceive things, how you relate information and things like that. So I think this is going to be a really good book. I don't have much else to say about it, unfortunately, but that's.
I read this one last year.
Oh fuck.
So a lot of her big things is she's big on coaching. So she gets a lot of these like really cool coaches to kind of help train her, and it's just like for her journey of like being again a complete novice to making it to the World Series of Poker. Obviously, she doesn't win.
What the fuck?
I mean, come on, it's just spoiler alert. But yeah, I mean, she throughout the book she kind of like talks about it. Again, her making it there, so you kind of know she's not going to win. But it's just her journey, and again, it's a very interesting book that hopefully you'll enjoy, other than being just
other than knowing the ending.
Sorry. All right. So I finished Talk Like Ted. This was a book.
Talk Like Ted, you said?
Did you read this one?
No. Sounds great though.
So it's basically we all know the TED Talk videos. I actually watched a bunch while I was away after reading this book, just to see like how these guys and girls are able to really articulate a point over 18 minutes, and like every word they say has value. There's no ums, there's no thes, there's no it just
there's like the pregnant pauses that are for dramatic effect, things like that.
So I was watching a bunch, and they're really good. And the book kind of just goes into a lot of their big things. For PowerPoint presentations, no longer than 18 minutes. If it is longer, you have to kind of introduce some videos or some other things to kind of break it up. No words, like they talk about how like one of Bill Gates's things, like he was 30 slides in and only used 40 words because most of it was just just a visual. It's more of a visual thing where most people tend to jam a slide full of a lot of text and expect to talk while you read it and retain it. It's just not very efficient.
Right.
So it was more of a book to if you do have to present or you do PowerPoint presentations, definitely helpful in that sense. And
I think it's so much broader than that. It's just like controlling a conversation, making your points really effective. I think it could have so many different uses that you wouldn't think of in life.
No, there's definitely it was definitely. So I bought a bunch of these books like a year or two ago. Like I read one out of 10 book, and then I kind of went down a rabbit hole, and I bought a bunch, and then I kind of like lost interest in most of them, and then I just kind of picked this one back up, and then it was a pretty interesting read. And again, I've started watching the videos, and a lot of them are very insightful.
Yeah.
So I guess that's it.
Wrap it up.
I think we're done.
Just staying up. All right, guys. Till next week. Like, comment, subscribe. Give us what you want. Give us what you need. All right, guys. Later.